a wonderful, informative webinar on all things auditing and accounting related in your sectional title scheme. We have prepared a list of questions, and our consultant and engagement partner will be answering them for us. And if you have any further questions for them, please feel free to ask them in the chat box, or please wait until the end. We will leave a bit of time for questions more towards the end of the webinar. Cool. And then I will just hand over to Kyle for some housekeeping things. And then I will be introducing our speakers for today and starting our questions. Kyle, go for it.
Right. Good morning, everyone, and happy 2023. I hope that everyone is doing well, and thank you so much for tuning in to see our first webinar of the year. This webinar is going to be recorded and published on our YouTube channel, so please remember to like and subscribe to our channel. If you haven't already, please do sign up to our newsletter. This way you can keep in touch with the TVDM consultants team and be a part of the first to hear when our neighborhood will be launched. I'll post the relevant links in the chat. For those of you who don't know, Zelinda will be attending the NAMA Bloemfontein workshop this coming Saturday. So if you're in the area, please make sure you get your tickets. I'll also add the link in the comments for that. We also have our Let's Get Physical Durban edition coming up that will be co-hosted. And that will be on the 16th of Feb, which will be at the Westville Country Club. If you would like to attend, I'll also leave the registration link in the chat. Please also make sure to check our start to finish trustee training in conjunction with TVDM consultants, and that link I'll also leave in the chat. We hope that everyone enjoys today's webinar, and can I please ask that everyone just stays on mute? Thanks. Thanks, Nicole.
Cool. Perfect. Thank you so much, Kyle. So without further ado, I would like to introduce the client service team from PKF Octagon, Monique van Wyk and Alistair Scholtz. So I'll just be giving a brief background on both of them, and then we can jump onto the questions. Cool. So a bit about Monique. She is a qualified chartered accountant and a registered auditor. She joined PKF Octagon as a psycho trainee accountant in 2007 and was promoted to partner in 2019. Monique has more than 15 years of experience across multiple business sectors, and her practice specializes in providing personalized accounting, assurance, and taxation services and support to small and medium-sized entities. Her diverse industry experience includes community schemes, not-for-profit organizations, hospitality, property practitioners, property investment and development, construction, manufacturing, legal, retail, media, and information technology. Really, anything you could need, Monique could help you. And Monique has a very keen interest in the community scheme environment and is focused on adding value, compliance, and consistency in the industry, with the preservation of property value foremost in mind. Cool. A bit about Alistair. Alistair holds a BCompt degree and completed his psycho training contract at PKF Octagon in 2005. His interest in the community scheme environment was sparked by serving as a long-standing body corporate chairman and having to resolve complex matters involving local council and property developers whilst working closely with specialist attorneys and property managers. I'm sure many people can relate on the call. Alistair has extensive experience in the community scheme and property management industries, both locally and internationally. He began his career as a financial accountant to numerous not-for-profit, legislated, and voluntary city and business improvement districts before being tasked with overseeing the financial management of the urban management companies themselves. He subsequently joined a leading national residential property management company, where he was responsible for the establishment and oversight of the accounting functions throughout South Africa. Alistair then moved abroad in 2014 and was appointed as the National Administration Manager for the financial services projects by the largest interstate strata management company in Australia, before finally joining a boutique syndicated commercial property investment company as a fund manager responsible for both financial and operational management. Cool. Now that we know a little bit more about our speakers today, I think we can jump into some questions. Perfect. Okay, cool.
Thanks for having us, Nicole.
And thanks for the very nice introduction.
Of course, we are so happy to have you today. And I think a lot of people are definitely interested in hearing more on this topic. Cool. So, why does a body corporate's annual financial statements need to be audited?
Nicole, so it's first is prescribed by the Sectional Titles Management Act. So you can't get away with that. And then secondly, it also assists whoever is looking at the financial statements to make the right decision. So they know it's audited, so they can rely on it. And then also, I think just as added value, it's for the people that it's basically helping them to know that the practice is accountable, basically. Yeah, so I think
to hold people accountable for the administration of your funds, it's got to be run as a business.
Yeah.
Perfect. Cool. Thank you. And when would be the best time for a body corporate to have the end of its financial year? I know this is quite a tricky question. I know I've attended quite a few AGMs where owners complain because it's been delayed past within the 4 months, as the Act says. And the reason almost all of the time is they're waiting on the auditors for the financial statements. So in your opinion, what is the best way to avoid that?
Well, I mean, there's not really an ideal time. I think it depends on the trustees, and it depends on when the body corporate is obviously now registered. But I can tell you from an auditor's point of view, our biggest influx is in February. A lot of entities have a February year end. So when we talk about auditing, and you see that a lot of the entities are having a February year end, you can imagine that us poor auditors are doing audits all the time during that period. So I would say maybe look towards the end of the year. But
Nicole, yeah, I think as long as, the work, we'll touch on it a little bit later. I know it's one of the questions that's coming. If the work that is presented to us is in order, it really shouldn't be a problem, irrespective of what the financial year end is. We can work around it. Planning is important, so we need to know upfront, and we can then accommodate. Nothing's impossible. A big part of it is the quality of the work that we receive.
No, definitely, it's true what Alistair is saying. I mean, if we get only half the information, obviously the time spent to get more information also needs to be factored in. So, I wouldn't say there's a best time, but just from my point of view, I think it can be any time. And like Alistair said, communication is key, and preparation of the documentation is also very important.
Perfect. Yeah. Preparation is always key, I think, especially in anything community scheme related.
Correct.
Cool. Who is qualified to undertake the annual audit of a body corporate? And are there any auditing frameworks that have to be complied with?
Okay, so I'm gonna answer very short and sweet. So only a registered auditor in terms of the Sectional Title Management Scheme Act and the Auditing Profession Act can actually do that audit. And to talk about the auditing framework, so also I just understand there's two frameworks, so it's auditing framework and the accounting framework. Auditing framework, we have to do it in terms of the International Standards of Auditing and also our Auditing Professions Act. So those are our guidelines, how we compile our audits and actually action our audits. If we talk about the accounting framework, the Act is very specific to actually say that there's not a specific accounting framework that needs to be used. It's user defined, so that's
user defined and taking into account, the requirements prescribed by the Act.
Yeah, absolutely.
So I think it doesn't actually the fact that the act is not specific, not that it doesn't really matter, but the fact that your internal professional standards and regulations are already so high, so that makes up for it, I think. Or would you agree with that? Yeah.
Yeah, no, absolutely. And I mean, the accounting frameworks that can be used in any other industries, for instance, IFRS for SMEs or IFRS. So sometimes you find that the body corporates are actually compiling in terms of those requirements. But I mean, it's not wrong. But it has to be user-defined in terms of the sectional type. Yeah.
Perfect. I'm just making a lot of notes here because if there's anything that is not my greatest category, it's definitely anything numbers related. So I'm learning quite a lot already. Cool. Why would a managing agent appoint a compiler as well as an approver?
Monique's going to answer this, Nicole, but I just wanted, it's not the managing agent per se. So maybe that just needs to be, it's not the managing agent that's insisting on that, but I'll let Monique answer sort of from here.
Yeah, so I mean, just in terms of the prescribed management rules, we actually have the auditor is not allowed to compile the financial statements as well. So it has to be two separate individuals, and the auditor needs to be independent of that process. So it's I can even give you the rule. It's 26.5 that specifically says that we're not allowed to compile. So, and it also helps with the independence. In terms of our Auditing Professions Act, we have to be independent.
Perfect. Okay, cool. So is there a requirement for auditors to be changed every X number of years? I think that's a very good question, considering most bodies corporates have had the same auditor for years and years.
Yeah, so the short and sweet answer is no. In terms of, so the Sectional Title Management Scheme Act doesn't guide us there, so there's no, it's silent. So in terms of that, we don't have to rotate. In terms of URBA, I'll just give you a brief background. Only public interest entities have to be rotated every 5 years. And also in terms of the Companies Act, so this is applicable to the homeowners associations with a PI score of about 350 points. They have to be...
would that mean 350 units in an HOA?
Yes, so anything over and above 350 units, actually, I think you can read the Companies Act to say that the audit needs to rotate every 5 years.
Wow. Okay, that's really interesting about the HOA statement that you made. Wow, that's actually quite crazy. Cool. And then when must the annual financial statements of the body corporate be audited? And when did the members have sight of these audited statements?
Okay, so just as we all know, the Act prescribes within 4 months of the end of the financial year. Possible, absolutely. Does it sometimes not happen? Absolutely. At most of the time, it probably doesn't happen. Members generally, I mean, I would imagine past experience, current experience, will have sight of that set of financials at minimum 2 weeks before the AGM, 14 days, when they receive that AGM pack. I mean, I think that is, you know, just to sort of move off your exact question for a minute, that would be the ideal time to ask the questions. I mean, you know, unless there's an agenda to come to the AGM with, ask your questions then. I'm sure they can be explained, you know. It's, I think there has to be a reasonable approach taken to the whole reading or viewing of financial statements by people that have not necessarily been involved throughout the year. Yeah, so I think so. So that'll be the best. I mean, 14 days at least with your and 4 months within 4 months.
Perfect.
Yeah, we will touch on it later too. I mean, we do try, I'll throw it in here now. You know, if you consider whatever your year end is, generally we like to work on the principle that we allow the managing agent 1 month post year end to prepare the documentation and the work. We allow then ourselves roughly a month as well, leaving you till the 2 month window with any luck to hold your AGM.
Yeah.
Perfect. Yeah. Again, it's always great in principle, but like you say,
absolutely.
It's so tricky. Yeah. Cool. And this is a really good question because I've seen it create a bit of tension at AGMs. Must the trustees sign the annual financial statements before presenting it to the members at the AGM, or can the trustees sign after the members have considered it? Considered it, not approved it. Very important.
Very important.
Correct. As you say, Management Rule 17.6 clearly says that the trustees approve and the members consider it. Now, this is how long is a piece of string. I think it's right that way. The trustees are tasked with the financial management. The trustees are involved. They know what one would hope that they know what's happening during the year, any sort of specific events or occurrences that took place, anything that has bearing on that set of financial statements. You may have owners that come to the meeting once a year that then want to cause a bit of a noise around the financial statements, but really if you haven't been involved, what kind of position are they in to actually say, yes, those financial statements are right or wrong? The trustees hopefully have worked within budgets which were approved at the previous AGM. They've worked within restrictions that may have been imposed. So really they've had a set of guidelines and, as I said, are best placed to sign those financials. I feel if you were to leave it to the owners, well, I don't think you'd ever get a set of financials signed. And even on that basis, let's say that was the case, what do you consider a fair percentage? How many have to approve it for it to be considered approved? Yeah. So just logically and practically, that doesn't make sense. The trustees are the gatekeepers. They are ultimately responsible. It's said multiple times in the audit report. The trustees need to sign and approve.
Yeah. Yeah, and I think if you look at body corporates with about 2,000 units, it's going to be quite a tedious process to get them to approve it. So,
absolutely.
Yeah, I think it's there for a reason.
The level of resolution that you mentioned, that I've never actually thought of that before, but that's an excellent point because
it's impossible, Nicole.
It is, yeah. And
attendance then I think alone is an issue. So if the attendance is not there, exactly.
And then say you have a convened meeting and now there's even less people. Now those people have to pass it.
Absolutely.
That seems outrageous. So I completely see. I think leading on from that question, I mean, we can clearly see that members obviously don't approve. It's all up to the trustees. Members just consider it.
The trustees are the ones, if you like, as I said, they're the gatekeepers. They have the inside information. They've been privy to running the scheme for the past year, and rightfully they should take accountability for that. This is just, to me, another step in ownership of your duties.
Yeah.
Perfect. Okay, cool. Do you think it is a good idea to invite the auditor to the AGM to table the annual financial statements?
So I actually don't think it's a good idea. I wouldn't recommend it. But if there's any anomaly that the auditor has picked up during their audit process, then obviously I think it may be good practice for them to go and explain exactly what happened. We do prepare in any way a report to management, which would be the report to trustees, to highlight all the issues that we picked up during the audit. So that's also given to the trustees to present to the members. So, but I would definitely not recommend it. I think that whoever's preparing the financial statements, whether it's a trustee or whether it's the managing agent, they need to table the financial statements.
I think, as Monique says, except in the case where there is something out of the ordinary, and also something to bear in mind, which is a problem in the industry. We won't touch on it today, but there's a cost implication to asking the auditor to come. So unless it's absolutely necessary, I think the average set of financials is easily enough understood in theory for someone to be, and especially if you do comply with the requirements of the Act. What you need should be clearly set out in that set of financials.
Yeah.
Perfect. Cool. All right. So how long must a body corporate's books of account or financial records be kept?
So the sectional tax. I actually stumble with that word every time. But the Sectional Title Management Scheme Act governs 6 years, and then in terms of the Companies Act is 5 years for homeowners associations.
Perfect. Cool.
Oh, okay.
Oh, sorry, no. You are right, it's 7 years. Yes, 7 years, sorry.
For the HOA.
For HOA, yes.
Perfect. And then for a common law HOA, it would be whatever the Constitution says.
Yeah, most probably. I think they can definitely go on to the 7 years and limit to 7 years.
Yeah.
Good
Rather
governance.
safe than sorry.
Good governance, yeah.
Good governance, absolutely.
Yeah.
Cool. Why do you think the requirement for an accounting officer was repealed for smaller schemes?
Okay, we've had to think about this, and really the only thing that that we've sort of been managed to find is that banking institutions were starting to ask for audited accounts before they granted mortgages to prospective buyers. So we reckon that's really what prompted the change. We'll touch on that a little bit later too. Whether it was a good thing or a bad thing is debatable, but we understand that to be the main driver.
And also the reality is there's so much fraud going around that it makes sense. It really makes sense to implement it.
Perfect. Okay, yeah, it absolutely does. Okay, this is a very interesting one. What amendments would you propose to the ASMA regarding financial management of a body corporate?
So, I mean, from our point of view, and it's just purely based on our experience with the trustees, I would definitely implement some sort of, or recommend some sort of, that the trustees or the financial trustee must have some sort of qualification, some sort of background, financial background, or experience, or whatever the case might be, just so that that gap is actually taken away.
100%.
And then also the 10-year audit, the 10 units. I think that's also
at the beginning, it's great. You think, oh yeah, we have to audit. It's extra business, if you will. But the reality is, again, and we come back to that cost implication. I don't know. It's a challenge as it is. If one could work with these institutions that rely on these financials to say, well, look, there are now all these additional built-in, or maybe if the independent reviewer is still made to look at sections 21, 24, 26, that you could look at taking it back to it, whether it be 10 units, less than 10 units, even maybe slightly more. We're just finding that the level of work that's required to produce those financial statements does not necessarily speak to what the body corporate is able or willing to pay for this type of service.
Yes, and if I can maybe just talk about the independent reviewer. So that's a separate report. So we are actually finding with some of our take-ons that some of the body corporates has independent review reports, which is in terms of the Act not right.
Correct. Or they'll talk about a combination of sectional title and the directors, the HOA. And this is not in a mixed-use development. That clearly whoever's preparing that just doesn't understand.
Yeah, so it's not correct in terms of the Act to have an independent reviewer looking at the financial statements.
Perfect. Cool. Thank you. Is there anything else?
No, that I can think about. I was saying to Alistair, during our previous conversations, that maybe there should be some sort of guideline to say what trustees should and shouldn't do and what would be the implications. But I think that's just going to open a can of worms, so I'm not even going to do that recommendation.
Yeah, I think it would. I think it's already quite tense in some bodies corporate being a trustee, and I think adding that into the mix would just tip the scales.
Oh, absolutely.
Yeah. Okay, cool. Perfect. Would you advise for or against discounts for contributions paid in advance in community schemes? I know it doesn't happen very often, but recently I actually heard of someone doing it and they only got a 10% discount.
Well, you're allowed up to the 10%, right? So, we've looked at, just in a brief discussion, again, it's something we don't see in practice very often. We've bantered it back and forth, and we feel like possibly if the annual contribution was paid in advance, however small the benefit may be, at least the body corporate can bank that money and, get a little bit of interest on it. I don't really see the value in it if you taking a 10% off a monthly payment. I just don't see where the benefit lies for the body corporate.
Yeah.
Also, obviously, if you're going to allow that discount, there has to be sufficient surplus in your budget to allow for that. And as Monique then pointed out, well, not just in your current budget, if your admin fund is already in a deficit, well, you shouldn't even consider it. Yeah. Because the idea is obviously to run an efficient and profitable, but a scheme that at least in the black.
Solvent scheme, yeah.
Correct. So we wouldn't advise it then. I'd also probably, we've had a little bit of a discussion, wouldn't be that much in favor of it in respect of the reserve fund levy. We'd rather have the benefit of having that money invested and possibly then look at, obviously that's a moving target and that changes, but rather let that sit and accumulate interest where you can then potentially lower that levy going forward, as opposed to providing a discount on it, because that is saving for a big ticket item. So we'd rather limit it to the admin fund.
Yeah, perfect.
So not against it. Like I said, doesn't happen often. As long as the right checks and balances are there, we don't really see an issue.
And also, I think from an auditor's point of view, the moment you see a negative financial position, you have to make the users of the financial statements aware of it. So I would, from that perspective, not recommend. So the moment that the financial position has a negative, definitely not.
Perfect. Okay. Do you have any tips for owners at an inaugural first general meeting? So I've had this question quite a lot from not only owners, but also managing agents, just in the sense of, the Act, it does say the documents, but it doesn't really have any consequence for if the documents aren't handed over. So what do you think is the best way what are the right questions to be asking the developer and those types of things?
Okay. I think you the no consequences part happens often, let's be honest, but that's a separate discussion. From past experience, I'll tell you, just even dealing with things like tax registration, make sure you get that certificate of establishment. Otherwise, you've got to go and hunt the thing down. From an auditing perspective for us, make sure you get the sectional plan to make sure that your PQs are correct from the get-go. Any potential EUAs that are noted there, that sort of thing. You need those documents. Then on a more practical note, I think make sure you look at the insurance policy before you just, make sure that you have the correct public liability in place from the get-go. You may not have a great feel for the fidelity fund cover you need up front, but then set it at something that's realistic. So definitely check the insurance policy. Check any contracts, whatever services the developers put in place, check those contracts for escalation clauses, for duration, for early termination penalties if you want to, get rid of that service provider at some point. I would say check the budgets, because often I think the levies can be set very low initially, and then you come to realize actually running the scheme requires substantially more. So rather be realistic about that budget up front and look at it carefully before you say, right, that's the budget we're going to adopt. I'd also say, because it's a new entity or new body corporate, you don't have a feel yet for the people, for the trustees, for how it's going to operate. So make sure that you impose restrictions, reasonable restrictions on spending. Also, it don't, at least until you have a sense of or a feel for the people that are tasked with looking after your finances. I'd also say, very often, certainly from personal experience, the developer would be very friendly with a managing agent. So just make sure that managing agent can deliver what you expect them to deliver from the get-go. I think those would be probably my top sort of look out fors in terms of financially looking at where you're going.
I think it's very practical what you mentioned.
Yeah, the issue with those are such great points. The imposing of financial restrictions to the first elected trustees, that's amazing, because also, and I don't know if this is also in your experience, you found this, usually a majority of the first elected trustees are the developer or their elected representatives, because of course it's understandable that they often want to maintain an element of control, but then that can also be so tricky with regard to spending costs and spending other people's money, because of course up until that point they had just been spending their own money.
Absolutely, yeah.
And then the other thing I wanted to say was with regard to the budgets that are drawn up, I can't tell you how many times I've heard with new schemes where people have told me we actually don't know what to say for the budget, because besides the levy, because obviously the levy you're working on a PQ basis and meter squared, but they say it's so hard to put the budget together because, like you say, they actually have no feel for what their expenses are going to be like.
Absolutely.
And then, like you say, members buy in, oh, these levies are so great, such a great opportunity. And then in the next 2 years, it almost doubles or triples, and then they're super upset about it. But yeah.
I think you have to be reasonable, Nicole, nothing... again, I'm trying to think, cheaper is not necessarily better in the long run. Rather set that levy at a reasonable level. And, or, maybe even in that first year, if there is a bit of a surplus or a bigger surplus than there would normally be, so be it. But at least you can be comfortable that you're not going to have to put hand in pocket and fork out sooner rather than later.
Yeah, that's a great point. Yeah. Okay, cool. Perfect. Do you believe that a simple check current transactional, basically just your standard straightforward banking account, also commonly known as the body corporate's administrative fund account, meets the requirements of PMR 21.4 substantially?
I think as long as it's put in an interest-bearing account, because that's the criteria. Obviously, it's better if it's in a fidelity fund or a trust account that's governed by a fidelity fund. But
you are covered by insurance.
Yeah, you will be covered by insurance then. But as long as it bears interest, and like Alistair mentioned, it's as long as there's a dual.
Which is there's a requirement for that too. So we feel as long as you tick that box, and also you're required to have a dual signatory, it does give you an added layer of protection.
Yeah.
So to answer your question, yes, I think
absolutely
it's safe enough. And it's with a recognized banking institution. As long as it's in the name of the body corporate, 2 signatories, interest bearing, you don't see an issue with it.
Perfect. Cool. What is the difference? And this is a very important question, I think. What is the difference between the monies that can be paid out of the administrative fund accounts versus the reserve fund accounts? For example, what can the money in each account legally actually be used for?
If I can give you a very short and sweet answer, whatever is in the administrative fund is for your day-to-day running.
Your operating costs.
Your operating costs, yes. And then whatever is in your maintenance reserve must be for your projected capital expenditure. So preparing roofs and painting and
whatever's in your 10-year plan. What should speak to your 10-year plan? Look, this is a separate webinar on its own. But as long as also that we see this very often, there's still largely a big misunderstanding around this. Not a misunderstanding, there's been a slow uptake. Your plan should speak to that reserve fund budget and vice versa. So that's a work in progress. Maybe a few years on, we still see this. But yeah, there's obviously the requirements in the Act that have to be met in terms of what can and can't be spent or utilized from that reserve fund. But as Monique said, in a nutshell, one speaks to your maintenance, reserve and replacement plan, and your admin fund to your daily operating expenditure.
Perfect. Thank you. Thank you. Sorry. Another important question, again, with the compliance aspect, to calculate with the with the establishments and the enactment of the Section on Title Schemes Management Act came the idea of the reserve fund. And also with the regulations came the idea of minimum contributions to this reserve fund. But recently, I actually had one of our clients come to us and say, what happens if we don't actually meet those requirements? So yeah, perhaps you can tell us a bit more about that.
I'll tell you from an auditing perspective. So
I think, yeah, just one, as that's what we really can tell you, Nicole.
Yes.
It's great, but Monique will.
So from an auditing perspective, I mean, it's governed by the Act. So you have to have a reserve fund and you have to have an administrative fund. If you don't have it, it actually means it's not compliance with the laws and regulations, and it could lead to a qualification. And we can also then, from me as an auditor, I'll question the trustees, whether there's a breach in their fiduciary capacity. So I think you can go and lead that. But I'm not going to open a can of worms. I'm just going to say to you that it could lead to a possible qualification of the audit.
Okay.
Again, as Monique says, from an audit point of view, practically, we'd have to have a discussion with you.
We have a separate webinar.
You'd have to do more than just go to the AGM.
Absolutely.
Perfect. Okay, cool. Why is it so important to make sure that your annual financial statements are accurately reflecting the financial health of your body corporate? And further to this, what difference would this make on any external stakeholders to the body corporate, like banks, prospective buyers, that kind of thing?
So, for lack of a better word, short and sweet, we do feel, if you're going to approach somebody for funding, they're going to take a look at your assets and liabilities. So very important that is correctly disclosed. We often still see things where an audit's been done, but there are thousands, if not millions of rands that have not been raised as liabilities. I shouldn't even say potential, as liabilities. Yeah. It does happen. So certainly anyone who's going to provide you finance is going to be look at that. A prospective buyer, I would definitely want to see the health status of the body corporate. What am I buying into? Am I buying into insolvent building? Am I buying into a solvent building? Who do I owe money to? Is there the potential risk of a special levy coming to am I going to have to absorb this cost over and above my monthly mortgage and existing levy payment? I also feel you can certainly use, if those financials are correctly prepared, you can check things like general scheme compliance. Is there the correct insurance in place? Is there a maintenance reserve fund in place? Is the body corporate's tax up to date? I don't know the extent to which it is used, but theoretically it could be used by external parties. I mean, SARS may use your financial statements to verify that you've correctly calculated your tax, assuming you've correctly set everything out in the financials. We often still also see levies lumped. The Act says you've got to separate into every different types of charges. We often see accounts, it's just one line item levies. But so SARS could be one potential person. Have you correctly classified your income? Have you correctly paid tax on what is taxable? I feel even CSOS, if they really wanted to could look at your levy income to make sure you've included what needs to be included. Have you calculated the correct CSOS levy payable? So I think those are basically, external users can certainly use the financial statements for those purposes. Very important to correctly disclose. And if you do follow the Act, you should have a set which is compliant.
Yeah.
I think it's so important what you say when you mentioned if you were buying into a scheme, one of the first things you would ask for is the financial statements. And it's quite funny because I'm at that age now where a lot of, not me, but people I know are buying properties. And because obviously I work in the industry I work in, they ask, what should I be on the lookout for? And the first thing I say is sectional plans, rules, financial statements.
Absolutely.
Because honestly, without those documents, you really can't make I don't believe you can make a fully informed decision about this.
Minutes to add to that.
Minutes, of course, yes.
Yeah,
very important.
Perfect, cool. All right. I think this is quite important for our trustees. What are the do's and don'ts for prepping for audits to ensure that your audit goes off without any issue?
Okay, so yes, Nicole, I think I did mention it briefly. We hear we meet with clients and don't worry, everything's spot on. You're going to get a file that's in perfect condition and it will take you 2 days to do the audit.
You can see we are already sitting in a different position.
The reality is very different because I think our ready for audit and most people's ready for audit's not quite the same. But apart from your standard documents, your creditors aging, your debtors aging, your bank statements, your ledger, I think a few of the things that you can look at. Certainly what we would require, and we've done this more than one, sectional plan and rules, because we will check for things like exclusive use areas, anything that you may not at face value pick up, but that those documents may be able to shed some light on, we will look at that. So we like to see a copy of the plans and the rules.
And also we use it as our base.
Correct, because we actually check that, the correct PQs have been applied, etc., etc. The insurance policy, that generally does come, but that's another important one because we obviously need to report on the insurance requirements. One which is often misunderstood is the insurance replacement valuation, because we actually note when we know whether you're in contradiction of the act, contravention, sorry, not contradiction. So we like to see that. Minutes, which we touched on before too, and including the trustee report, because that's something we have to check that the trustees have presented a report at the AGM, tabled the report.
And just to get back to the minutes, we use the minutes basically to see whether everything that was made, that was decided on is actually brought into the financial statement. So the minutes are very important. To continue, if your scheme or your funds are held in trust, we like to see a copy of the Fidelity Fund certificate from the managing agent, just so we know that box is ticked. We are also required to see a copy of the levy increase notification, if you will, post AGM. It's another requirement, so we like to see a copy of that, notifying your new levy payable, the installments, the interest, and. Any loan agreements, if the body corporate is financing in place, whether that is a normal loan or a levy financing product, we need to see that because, again, that needs to be correctly disclosed in the financial statements so that any potential buyer, bank, etc., is aware of funding within the scheme. Then something which is quite important, some agents like to use control accounts, and we have no issue with that, but they often, and this is can cause a big delay. So I'll touch on this. If you're going to have an insurance control account, for example, make sure that when it comes to the auditor, you've sorted out excess recoveries, what needs to be expensed, so that literally what's sitting in there is either what's payable to someone or what is recoverable from the insurance company. Same with CSOS. We see a lot of payments owing to CSOS. There is a CSOS registration number, but for whatever reason, payments have not yet been made. Give us for us to sit and recalculate things, which we shouldn't be doing, it's time consuming, and it is a back and forth, and that plays into your argument of the delays with the auditor. And many times, I suppose it'd be fair to say that it is due to workload, but a lot of the time it's also outstanding questions and people that take quite long to get back to you with answers. And then I'll be honest with you, another big delay is trustees signing financial statements and sending them back. So we would have prepared within the required time frame, and then all of a sudden there's just a delay. So that's something also just to think about. But in short, in terms of prep, give the auditor as much information as possible. Like I said, certainly anything that the Act prescribes needs to be checked. Make sure we have that set of documentation over and above your normal accounting documents. That would certainly go a far way to alleviating any time delays.
Perfect. Yeah, I think that all of that is really great advice. And if there are any trustees, I hope that they took some notes, but no worries because this is recorded. Okay, cool. What is acceptable on an invoice? just want to check our time quickly. I think let's combine these next two questions, and then perhaps we can take some questions from the chat for the last 10 minutes. Cool. So what is acceptable on an invoice, and can a petty cash invoice book serve as evidence of invoicing?
I know that most of the body corporates, especially residential, are not registered for VAT, but I think one can use the VAT Act as a guidance. So the VAT Act actually gives you a nice guideline to say it has to have the address of both entities on it. It has to have a proper description, the amount, whether it's VAT inclusive or VAT exclusive, the VAT registration number of the supplier, perhaps. So that, I think, also like a tax invoice number. That's
not a quote, Nicole.
Yeah.
We very often get, as supporting paperwork, a quote.
Yeah. So it should ideally say it's a tax invoice with a invoice number on it. I think that would, for me as an auditor, I'll be very happy to see something like that. And then just to get to your second question, whether a petty cash could be seen as supporting evidence, I don't think it is. I see a petty cash slip as a payment requisition, or like a counterfoil and a check, or as just a proof of payment. To me, the petty cash slip needs to come with the invoice. So whether bread or milk was bought, or whatever the case might be, I need to see the invoice at the back to say what the petty cash was used for.
Perfect. Okay, cool. Thank you so much, guys. I think we can, I'm just having a quick look at the chat. All right.
I think just before you go there, there's one there. I don't know if there was a question from one of the viewers, I think.
Yes,
that specifically around the audit report, and I think Monique has actually looked at that. And
oh yes, I can read the question out quickly. Sorry. The audit report places quite a bit of responsibility on the trustees regarding internal controls, going concern assessment, and preparation of the audited financial statements. The vast majority of trustees are not financially savvy, as you've mentioned, and would not know what an internal control is. I don't know what an internal control is. Is it therefore realistic to place this responsibility on them?
Yeah, I think that adds to our proposed amendment, where the trustees needs to have some sort of financial background. But I mean, there's also options that the Act does give us, whether it's what's it called,
executive managing agent. I think if the trustees feel that well, first of all, if they're disinterested or don't have the necessary skill set or time, and again, I think look carefully at your managing agent. They should have that skill set. So I think they should be there to guide and support the trustees.
Yeah. So, and that will actually help. That will add to the skill that's required. They will know what internal control is. We can have a next webinar and I can explain to you guys what internal controls are.
100%. Okay, I think that is definitely something we should look into, because I do think that this is a massive part. The accounting and auditing in general is because of the point that most trustees are not financially, or not financially savvy people, but they don't work in the profession or the industry, so they don't know the ins and outs. So I think it's really important, this education, and the webinar is a really nice, interesting way for people to engage. So yeah, I think we would love to have you again.
And speak to your auditor, speak to your managing agent, speak to your accountant that looks after your building. I mean, these are all people that really should be able to help you and guide you.
Perfect. Thank you. Okay, cool. So a question from Susan is, what are the specific tasks that an auditor performs for a body corporate?
So, sure. That's also a webinar in itself. I mean, if you think about the time that's involved in auditing, I can't answer it in a very short, but I mean, just so...
The background stuff.
just the background stuff. I mean, we look at a lot of stuff, and because if I put my signature on that audit report, I need to make sure that I'm happy to sign that set of financial statement that is free from any material statement, according to me. So I will prepare my audit procedures to actually talk to that. But I mean, there's lots of science behind this. So, and we audit to see whether it's complete, whether it's accurate, whether valuation is correct. So I'm not gonna go into.
There's a whole set of requirements that URBA requires from Monique as an auditor that the client is unaware of. You know, there's risk assessments. You know, there's a whole basket of things, and then there's the practical stuff that is required by the Act. Is the insurance in place? You know, are the simple things, and that's why I feel it's a very onerous. An audit's not an easy thing. It is onerous. There's the perception that the auditors take what they're given. I'm not saying it doesn't happen, but and they put it onto a set of financial statements and produce it for you. For proper audit is conducted, we will check 21, 24, 26, the requirements. We will comment on that. That's the face value services, and then you have all the behind the scenes requirements, which URBA requires, and so it really is comprehensive.
Yeah, that's in a nutshell.
Perfect. I think that this is quite an interesting comment from Andre. He says that PMR 261F requires that trustees report back at the AGM on their curatorship of the body corporate funds and budget for the preceding year. However, there is no rule or mandatory requirement for trustees to produce a performance statement, part of the annual financial statements, which reflects actuals versus budget, the variance amounts, and percent and concise explanatory comments. After a fight with our auditor who refused to amend his summary template to cater for it, he reluctantly agreed to include it in an unaudited section as additional information.
Yeah, so that will definitely constitute additional information. But also because the financial statements is not prepared in terms of a specific framework, it could very well be included.
I think the point of a financial, you're reporting actuals on a set of financial statements. I think budget, a budget is not an accurate number. That's exactly what it is. It's a budget. It's a calculated guess at what your expense is going to be. If you are sowing, and I mean, I think your budget for the following year, you should get your comparative, the actual from the prior. Okay, fair enough. It is a comparison to what's coming, but I think you can derive a lot of information from what's coming, potentially from what has happened. Yeah. So it's not a requirement that the budget be presented as a comparative financial statements report figures as at a date, not against a budget.
Yeah.
That's an internal, that's a management tool.
Yeah. Yeah, it could be an added document, definitely to the set of financial statement, but it's definitely not required.
This is one of the things, if you do have a query, I think that 2 weeks before is a good time to raise your questions on something like that. I mean, if you're following it that accurately, ask your questions at that point in time to the trustees, to the managing agent, to the auditor.
Perfect. Cool. So I think I'm just going to ask one more question and then just going to give the floor to Sandra to ask a question regarding petty cash. And then everyone else, we have put Alistair and Monique's email addresses in the chat function, and it will be available with our recording of the webinar. So if your question did not get answered, please feel free to forward your question to them after this. They might even they'll reply quite timeously, but it might be even better because they'll have time to think and provide you with a nice comprehensive answer. Cool. That being said, most owners believe that the purpose of an audit is to check that the books and records are accurate. The financial side has been properly run, internal controls are in place, and that there hasn't been any fraud in the body corporates. However, the final paragraph of an audit report is basically a disclaimer in respect of all of these issues. How do you respond to owners who see this paragraph and ask what the point is of having an audit with this disclaimer?
Okay, so I think just to talk to that specific paragraph, we actually, if you look at the provisions in the rule, there's 4 criteria that we need to meet, or that we actually issue opinion on. So we do issue opinion on the first 2, which actually does talk to the accuracy of the financial information, and also whether the accounting requirements in terms of it's 21, 24, and 26 has been met. So we do talk about that. But with the last 2 things is that whether the financial, whether the body corporate and the management of it is done in a way that there's no fraud. I mean, we're not forensic auditors. So the guideline that was given by Cycle is that we can't actually give an opinion on this because there's no measurement. So we can't measure our audit processes against this requirement. So that was one of it. And I think the other one was financial affairs. I mean, it's not governed by the Act. So the Act doesn't tell us what's seen as financial affairs. So there's nothing that we can use to measure and then issue opinion on. So that's in a nutshell. But just for the person that has asked the question, it is definitely in terms of what Cycle has given us as a guideline.
Perfect. Thank you so much. And then Sandra, if you would like to unmute yourself and just ask your question regarding the petty cash, please. Hello.
Hello. Hi, everybody. Just a very quick question from our side. I've had a couple of situations where we've got stand-ins for employees, or someone just helping with painting, the maintenance, that kind of thing. They don't have access to Microsoft Word and unable to generate an invoice. That's where I genuinely use that petty cash book where it's got that carbon copy, and I actually write down who it's addressed to, who it's from, what it was for, and all of that. So if we are not actually permitted to do that, what would be the alternatives? Thank you.
Yeah, Shana, I do understand from that point of view, Sandra. It's you can't expect a painter on next to the road that is going to have a computer and issue an invoice. So, I mean, yeah, the value. I think that hopefully the auditor will see that as an immaterial balance and audit it accordingly to that and understand the situation. But ideally, there needs to be some sort of invoice, some sort of agreement. I'm
thinking possibly, you could prepare an invoice and have the person, the painter, sign off that he's acknowledged that he's received the funds. I mean, I think materiality is important here. I mean, if 3/4 of your budget's gone through petty cash, we're going to raise our eyebrows. But if someone who's worked on a Saturday and earned X amount, there's a reasonableness. Yeah, there's absolutely. That's how we look at it. So hopefully it will not, be a big problem to the auditor if it, like Alistair said, if the minority of your transactions goes through your petty cash. If the majority of your transactions goes through your petty cash, I would recommend that you get some sort of evidence to substantiate your payments.
I see Edna also mentions in the comment that, and maybe this is also something that could help. She says that I get them to sign an acceptance of the cash they have received, as well as a writing up all that they paid for.
Yeah, that would definitely, from an auditor's point of view, I think be appropriate.
Cool. Well, thank you so much, everybody, for joining us. And thank you so much to Monique and Alistair. Everyone on the chat function is saying what a very informative and helpful session this was. So I definitely think that we should definitely do more on this topic in the future. So yes, thank you so much for everything, and thank you everybody for your questions. And remember, if you have more questions, to pop Alistair or Monique an email. Their addresses are in the chat box or on the website, and I'm sure Kyle will post it with our recording. Cool. Thank you so much, everybody. Yeah. Thank you. Have a wonderful rest of your week, and have a great weekend from tomorrow afternoon.
Thank you.
Thank you. Bye-bye.
Bye, everyone.